Welcome everybody. Well, let me first off, welcome everyone. Thank you for joining our webinar today. I'm Dee Dee Richards. I am the Chief Strategist with myNHD, and we're doing a new series called myNHD Featuring. And this is a series to help you in your business, not just with natural hazard disclosures, but with everything that you do. So today we're talking about insurance with two amazing insurance professionals. And they're going to be talking with you about all the crazy things that are going on in the insurance world and how you can, the tips and tricks and best practices you can utilize to ensure that your transactions are closing as successfully as they possibly can in regards to insurance. One of the things that we really believe at myNHD is that nothing happens alone. We all work together to make transactions close successfully. And we consider ourselves more than just your disclosure company. We want to be your partner in business. And by doing so, we're bringing you these wonderful information webinars that will help you and your business and help you get knowledge to bring to your clients that will help them, help you, and help close your transactions more successfully. If you're not currently working with myNHD or with a disclosure vendor that helps your business outside of disclosures, then you might want to consider doing that. And we'd love to have you as a client of myNHD. So without further ado, I'd like to hand this over. We're going to do kind of a Q&A interview session with Jimmy Lewis and Seth Aruda from myIQuotes. Guys, take it away.
Hello. Thanks for inviting us today, Dee Dee. Really grateful and honored to be here talking about the wonderful world of insurance. Our goal is to provide you with some information as to what is going on in the insurance market today, and more importantly, how you can better help navigate through the insurance component of your real estate transactions. And so we've put together some questions and answers and are going to have just some discussion. As a matter of a little bit of housekeeping, I am seeing here that the chat functionality appears to be disabled. So Dee Dee, if it's okay with you, let's just, if you have any questions, please put them in the question and answer section. Yep, and we'll watch that. We absolutely encourage questions. Hopefully we give you some good information and that might get you thinking about insurance a little bit. Yeah, so that's that. So Dee Dee, you're the interviewer, so let's do this.
So let's talk about all the craziness that is going on in the insurance world. And we're going to talk about a couple of things that I just found out about today that I've never heard of in all my 30 years plus in real estate. Talk a little bit about, Seth, what's really happening in the current insurance market. I know it's changing every day, so get us up to speed on what's happening now, what you're seeing.
Yeah, I'm not sure if anybody can see my screen. I guess I'm just coming up as my name, but I'll just kind of share some information on what's happening. This has been one of the most challenging insurance markets we've seen in over a generation. We're in a very, very hard market, not only here in California, but all of the United States as a whole is in a real hard market. So a lot of insurance companies are reporting unprofitability with their combined ratios. And there's a lot of contributing factors that we've seen with this. There's a rise in catastrophic disasters nationwide. And California, just as a snapshot, has had 5 years of a few very catastrophic wildfire seasons. We've seen some of the most catastrophic wildfire seasons California has seen in history just in the last few years. 2017, 2018, and 2020 were some of the largest fire seasons that we've seen here, causing over $13.8 billion in damage from each fire season. And couple that with the inflationary environment that we're in right now, the rising cost of construction, rising cost of labor, transportation costs, even the cost in repairing and replacing vehicles with a lot of the supply chain issues we've had over the past few years, along with some other contributing factors, we've seen the cost and claims rise exponentially. So a lot of the insurance companies are reevaluating their books of business, looking for different ways that they can try to make sure that they're covering losses currently and being able to cover losses in the future. And this is causing the environment that we have right now, coupled with a lot of regulatory challenges that we face here in California. And that's why we're in a pretty hard market here in California as is. So it's challenging, but the best thing that you can do is gather up as much information as you can and have those resources available to you so you can solve those problems.
Absolutely. And we were talking earlier about, you mentioned the inflationary element of this, that it is just costing so much more for problems to be fixed. And whether it's wildfire or something else, it's just increased, the cost have increased exponentially. And we thought that would kind of pare down after the pandemic, and we'd see a little bit of relief from that. But in a lot of things, it just hasn't come yet. And because of inflation too, that is certainly not helping. And we hope that that is going to come down a little bit before the end of the year. Hopefully we see rates closer to 6 by the end of the year, which I think is possible. But we'll have to see what that takes us. And I think it's important to note, Seth and Jimmy, that this is not just happening in California. So when realtors are talking to their buyers and sellers about what's going on in California right now, it's important to note, so I think we don't get people that are like, oh, I'm just going to move somewhere else and it'll be so much better. With the insurance, it's not. There are issues everywhere. So what is the #1 insurance claim in the entire country? Being from California, I would have thought it was wildfires or floods, but what is it?
Yeah, all sorts of catastrophic events. So the most common insurance claim is a water claim. Or what we call in the industry non-weather water loss, pipes bursting, but that's not the most costly. The most costly claims are some of these catastrophic events. And one of the top insurers, Pure Insurance, released a report in 2022. The #1 type of loss was a hailstorm and tornado, big thunderstorm type situations. Followed that by hurricanes. We don't get affected by that here in California, thankfully. And then 4th on the list is wildfires, which feels like the #1 catastrophic event that we're dealing with here in California.
It does, for sure. So it's nice to know that it's further on the list. We don't want them at all, but this proves it is not just an issue in California. We're not even dealing with earthquakes here right now, and haven't for a bit, at least the big ones. So it really is all over the country. It's not just homeowner insurance rates, it's car rates too. I recently got a quote. I moved and got a new quote for my car. It was insane. It was double or more really what it would have been a year or two ago.
Well, Dee Dee, you came from out of state. So I would imagine most people on this call, you probably have auto rates similar to what you got quoted. There definitely is a sticker shock coming into California, especially Southern California, definitely. But yeah, I mean, as an example, the costs have gone up all over the place. This is very anecdotal, but in my household, we bought a car. We bought just a used kind of beater car for $9,000 in 2021. And in 2022, unfortunately, we had an accident and the car was deemed to be totaled by our insurance company. And I'm my own insurance agent too. So that was challenging because I'm like, oh no, that's going to cost a lot on the claim. But still, we paid $9,000 for it. These auto policies are a actual cash value policy. So they pay the market value of the car when you're in an accident. The payout was $17,000 because in just 1 year, we bought it in 2021 for 9. Totaled it in 2022, payout was 17 because that's what those cars were going for. And we're seeing that all over the place. I mean, in construction, the rebuild costs have gone up. Back in the day on the insurance side, remember, we don't insure the market value that the homes sell for. We insure the reconstruction cost.
Right.
And back in the day, we used to say, average tract homes in California, $150 a foot or so to insure them. Gone are those days. The minimum starting is more close to $300 a foot. And I'm seeing bids actually for new construction in my area starting at about $500 a foot. If you go into the hills, it's $700-800 a foot. It's really incredible how the costs have gone up.
It's true. And we're seeing this not just with car and homeowners insurance, but I heard this week about a home warranty policy not being renewed. And I've never heard of that before. And they told me they really weren't even making any claims. They made a few claims last year, They had had no claims this year, and their renewal, or they were given a letter that said they would not be renewed for the home warranty policy when it comes up in a couple of months. So there's a lot of insurance issues going on around just all across the board.
Dee Dee, you bring up a good point, and I just want to share a little inside insurance tip for everyone
Yeah.
here. Home warranties. So we don't sell those. Insurance agents typically don't sell those programs. However, I'm familiar with them, and usually they're included as a part of a purchase transaction for the first year. However, there is a component that is being offered in more and more homeowners insurance policies that kind of acts like a mini home warranty, and it's called mechanical breakdown coverage. It's not as comprehensive as a home warranty policy by itself, but it does provide coverage for mechanical breakdown of your home systems and appliances. This is great if you're in the desert, you got air conditioner. Well, air conditioner just about everywhere these days. Pool systems, any other large systems. I really encourage everyone to just check with their insurance carrier and see, is mechanical breakdown coverage available, because more and more companies are offering it, and the cost is actually, it's phenomenal. Home warranties, I don't know, they cost what, 400 to 1,000 plus a year.
Yeah.
If you renew, and I think most people typically just let them non-renew after the first year of buying a home.
Right.
Home warranties sometimes cost, I don't know, $35 to $55 a year to add to your homeowner's policy. Now they come with a slightly higher deductible. It's usually about $500. But again, if you're going to drop the home warranty, maybe you can get coverage for that AC or that pool system through the equipment breakdown coverage through a
Right.
homeowner's carrier. Just a little sidebar, a little tip.
Are they pretty good with that? Like they'll come out pretty quickly and make that happen? Or is there a lot of red tape to deal with that? Because I think that's a really important thing for realtors to grab. And what a great connection point for you to reach out to your past buyers in their home. Their year anniversary is coming up. Hey, how's the home warranty going for you? If you had a home warranty. When I was practicing real estate, I always bought them for my clients. Even if they didn't ask for it, I was like, I'm getting you one. And then you can tell them about this mechanical breakdown coverage, check with their insurance company, because even if it was with the deductible and the cost of it, I mean, that sounds like about less than a renewal for a home warranty would be, because the renewals are always more than that first year.
Correct. Yeah. I mean, the experience in filing claims under the equipment breakdown is somewhat limited, because I've been seeing more companies starting to offer it just in the last couple of years. So your results may vary. Sometimes you run into issues where if a system is truly at end of life and it's not a true mechanical breakdown, but it's at end of life, then you may not get the coverages that you're hoping to get, similar to a home warranty. And there's probably some, I can speak personally too, from the home warranty I had. I didn't have a super positive experience when I bought my home, but I was glad it was there if something bigger would have broke. I was dealing with just a garbage disposal and not something like a whole HVAC system. But if there really is a mechanical breakdown or a power surge and it fries your components, it's a valuable coverage to have. And the fact that it's $50 or so a year, it's kind of like a why not add it? Just like on auto policies, Dee Dee, I hope we could take a look at your autos. Even though it's expensive, I like to throw in a little option for glass windshield coverage if it's available, right? Because everyone has high deductibles, but windshields crack. And so for $50 or less out of pocket, you can get your windshield replaced if it cracked. And so for little things like that, I like to add some of those bells and whistles to the policies, because when things do happen, it feels so much better to tell the client, yes, you have the coverages, the right coverages in place. It's not just about getting the cheapest policy out there, but we're going to, hopefully when and if you have to use it, it's going to meet your needs and meet your expectations and cover you.
I like bells and whistles that don't cost a lot. That's great.
Yeah. Cheap bells and whistles.
They're always good to have.
Exactly.
So let's talk about how this new insurance world is really affecting the real estate market and drilling down to real estate transactions, because I was practicing during the pandemic, and I think we kind of got into a certain space with our transactions where everything was happening so quickly, and we kind of got on that quick path. And I'm not saying that there were deliberate shortcuts, but you just had to move really quickly. And there wasn't as much time to really sit down with your clients and go over every single little thing. I tried to do that as much as I possibly could, but sometimes they just wanted to sign and get it done without even reading it themselves. So let's talk a little bit about what you're seeing from your purview. How is this affecting real estate transactions?
Well, insurance is becoming much more challenging to place. That's the bottom line. And if there's one takeaway from this entire webinar, it's you need to be proactive. Real estate professionals need to be advising their clients to be proactive and to start early. You know, California, we expressed some of the problems going on nationally with insurance. They're losing money, they're always saying they're losing money, right? They're always collecting our premiums and saying they're losing money. But there really is a problem. And here in California, the problem is being exacerbated. There's a big standoff between the regulators and the insurance industry. And the regulators are not approving any of these rate requests from the insurance companies. As an example, Liberty Mutual management met with us recently, and they shared some of their inside information and said, 3 years ago, the average property claim cost about $14,000 in California, and today it's running closer to $30,000. And even though they filed to raise their rates, the regulator hasn't approved them, and so they're effectively charging the same prices that they were charging when claims were 14,000 a pop, not closer to 30. And so that's a big problem. And so what's happening now is insurance companies are simply, they're fleeing the state. They're imposing moratoriums. The ones that are staying open are creating barriers of entry. It's becoming much more challenging to place a simple insurance policy. That was kind of an afterthought, like you were talking about. Everything's just flowing. The lenders would order the insurance right before funding and it would go in place. That's not happening anymore. There's a lot of barriers of entry. A lot of companies just aren't simply offering coverage. I'll name some of the companies that shut down. State Farm, they're not writing any property insurance in California right now. That's pretty wild, because in effect, I'm sure there's people on this call that could have had escrows affected too, because State Farm had about 20% of the property business in all of California. So that my head goes to, wow, that's 1 in 5 pending escrows that are in jeopardy now because they just lost their insurance option. Farmers is severely restricted. Allstate is shut down. Nationwide is shut down. Progressive Home is shut down. The Hartford, Aegis, American Modern, Foremost, Hippo, Kemper, Infinity, National General, Liberty Mutual, non-renewing. A lot of people, they just decided to completely exit the business owner policy market in California. Safeco, severely restricted. Travelers, severely restricted. 2 companies, Universal North American and First American, completely exited the insurance business. It's really, really incredible. So the thing is, again, you've got to start thinking about insurance. It used to be an afterthought, a pretty small cog in the whole escrow real estate transaction. There wasn't a whole lot of thought to it, but those days are gone. Insurance is going to take longer to place. A lot of people are having to use the California Fair Plan. I'm sure everyone on this call has had to use California Fair Plan or be involved with it in one way or another. It takes time to put a policy in place. I mean, at least 5 to 7 days. You can't send out a request for evidence and then have a same-day coverage. So we just need to be thinking about insurance more often and earlier in the transaction.
And when we were talking last week, in the before times, before insurance went crazy, we would pick up a phone and call a farmer's or a State Farm agent, and you get a quote really quickly, within hours sometimes, if not, at least maximum like 24 hours. It just didn't take very long. And when we were talking last week, you said sometimes it can take days for an insurer to get back to you on whether or not they can insure a property.
Yeah, absolutely. So many carriers, that the ones that are still open, are putting holds on new quotes. I just got a call from a client, Geico. They bought a car at the dealership and they needed new auto insurance. They called me. My carrier's Progressive has a 10-day waiting period. You cannot buy a policy same day. So if you don't have a policy already, you can't drive off the lot. So they thought they'd call Geico. Geico was a 15-day waiting period. Then I tried quoting with Mercury, 20-day waiting period. So it's, and I've heard that Farmers is doing waiting periods on property insurance. So it's very challenging. Again, you got to be proactive. You got to work with an agent that's proactive and understands these restrictions so they can get things into queue so that it will work with the timing of your closing. Because that's, you know, the insurance companies, they don't care about the rate locks that are expiring or the funding cutoffs. They just have these rules. And on the property side, a lot of properties, the underwriters are not relying on their automated systems for generating and approving quotes. They'll generate a quote in the automated system, but then kick it into an underwriting queue where a human has to look at it. And that's happening a lot. So there's a lot of backup in the industry. Just getting a quote can take days.
So let's talk about what agents can do about that to help prevent that from negatively affecting their transactions. So one thing you can do, if it's been a minute since I've read a car contract, it's been a little while, but it might be more common these days to write in the contingency for insurance, where it wasn't a second thought. Previously, it just wasn't a second thought. It's just like, okay, here's the recommendations I have for insurance. If you have one of your own, please give them a call. We just got into contract. Let's make sure you can get insurance. But that might not be good enough these days. You do something that's, you know, we get buyers that are coming a loan. We get buyers that need a loan pre-qualified for a home purchase. We kind of almost need a pre-qualification for insurance coverage now, don't we?
Yeah, yeah, I would agree with that. So one thing that we do, myIQuotes, we'll toot our own horn now just a little bit. We're very familiar with offering and providing insurance as a part of the real estate transaction. I myself have been doing insurance for over 20 years now. I actually started my insurance business inside of a mortgage company. And then I also was affiliated with an escrow company for over 10 years as well. Everything that we've been doing involved around with insurance is around the real estate transactions. So we understand that. And one of the things that we've done for listing agents or listing agents and prospective buyers is we can look at a home. If a listing agent's getting ready to sell a home, we can run a quote for it just to show you what the coverage options look like and pricing. I know for a fact, a lot of agents will talk to their sellers and say, well, what insurance do you have? Oh, I have State Farm and it was, you know, $1,500 a year. Well, that's wonderful. But State Farm's not in business anymore in California at this time, and that option's on the table. And you don't want to rely on those numbers because the carriers that are open today might be charging $2,500. So I've helped listing agents with running quotes, kind of a pre-qualified quote for the property to see what the costs look like. And that can help them as they market the property. For buyers and buyers agents, we work with them as well. If they're looking at properties, sometimes they'll run an address by us before they put in an offer, and we'll check it out. In a lot of situations, we can run a claims history report and see if there's a history of claims to the property. We can do a brush eligibility check and see if there's going to be any problems, and then give you some tentative pricing as to what the cost of coverage is going to look like too. And sometimes we even do that before an offer is made. So before everybody wastes their time putting in offers and then insurance might blow up a deal, they can get that information from us and help make a better decision as to how to proceed.
So important. We just have to really be proactive these days and make sure that we're looking ahead for any potential wrenches in the cog, and that could really put the buyers at risk of losing their deposit and blowing the transaction up and not getting to that successful close. And that's really what we're here to talk about. Also, I read something from NAR today, 26% of buyers are still all cash. So when you have a cash buyer, you might think, oh, they know what they're doing. They're paying all cash. They've done this before. We still, I believe, when I was a realtor, you have to take charge of the transaction. It's my job to make sure it goes to a successful close no matter what. If that means I have to oversee everything, then I'm gonna do it. And I never had a transaction not close. A lot of hand holding, but I never had a transaction not close. So it's more work, but it gets done. So you might need to counsel, might want to think about if you're not already. Don't leave it up to escrow. Don't leave it up to your lender to talk about insurance. Sit down early in that process with your sellers at the listing table, right after you get into a listing, with your buyers while you're driving them around, and just start kind of talking about things and how you are going to benefit them by working with you. You're going to help make sure that they get to that successful closing table and they can sign on the dotted line, because not all agents are as prepared as you are. You get to have great classes like this from myNHD and myIQuotes to give you the information you need, and all these little tips and tricks that are going to help you in the field. Same thing goes with getting your natural hazard disclosure. I'm from Northern California. I now live in the desert, but up in Northern California, Northern California and Southern California real estate transactions are so different. And we always got the natural hazard report, the prelim, all of our inspections up front as part of our disclosure package. So the benefit of getting your NHD report at listing, as soon as you take that listing, it doesn't cost you anything if it doesn't close. So we want you to have that report as soon as you take the listing. Call myNHD, talk to your rep, go online, myNHD.com, order that report, and then you have it in your hand to review with your sellers. Oh, you are in an AB 38 zone. And we're going to talk about AB 38 in a minute and how that's affecting transactions. So let's look at what we need to do to make sure that we are fulfilling our responsibility under the law of AB 38. Explain to them what that is, yada, yada, yada. So it's important to get ahead of these things, not wait until something blows up. We just had a client a couple of weeks ago, put a house on the market, sold very quickly to a buyer getting a loan, and then they backed out. And there's been a little time, and then it sold again within a week to a cash buyer. They wanted to close very quickly. The AB 38 inspection had not been done, and those can take days or weeks to do. So transactions are just more complicated these days. We have to be thinking well ahead of where we want to be. We have to start doing those things to get us to the end point, really in the front end of the transaction, not in the middle or the end. We just can't leave anything to chance.
Ordering that NHD report is so important and should be an early step. And I know, in speaking with others, that it's, a lot of people don't read the report, or it's too large or whatever, but these hazards that are spoken of in the report are becoming more pressing issues.
Yeah.
And they're having more impact. They're having an impact on the ability to close, and they're having an impact on the overhead and ongoing obligations of the prospective homeowners. And so I really do I agree with you, Dee Dee, getting the NHD report and read it. It talks about the hazards that we can cover. It talks about fire and AB 38 if it's in a special hazard zone. I do want to mention one thing about that just a little bit. The insurance companies generally do not rely on the mapping or AB 38 severe fire hazard zones. Most insurance carriers use their own proprietary risk mapping tools, and they or their own analytics, and they determine what they'll accept and what they won't accept. However, if the NHD report says that you're in a zone, and I think there's 3 different variations: state, fed, or state, local. Dee Dee, you can speak to that, but there's 3 different, zones. If it says yes, you are in any of them, don't look at the nose and think that you're safe. You need to make sure if any one of those trigger yes, it's safe to assume that there could be challenges on insurability. And then beyond fire, it also discusses if there's any flood hazards. I can't tell you how often flood insurance, most of the time I sell flood insurance, it's at the very end of a transaction. Somebody will give me a call and say, we just found out, we're right at the close. We just found out that we need flood insurance because we're in a flood zone. And that's an awful situation, because when you are in a flood zone, the cost is expensive. It could be $2, $3, $4, $5,000 a year. And that's an awful thing to tag to the closing statement right when you're at the finish line. So, natural hazard report talks about flood. Read it. If it's in a flood zone, talk to your insurance agent. And it also talks about earthquake too. Now, earthquake, there's really not much regulatory stuff about that right now. Earthquake insurance is optional, but I think it makes good sense to see if you're in an earthquake area or there's issues with liquefaction or whatnot, consider that, or at least ask the questions to make sure that the home is built in a way that it should stand a good chance against a good size earthquake.
Right. And for those 26% of buyers that are paying cash, remember, there's no lender to tell them that they need to have a flood certification done before they can close escrow. When you're getting a loan, the lender takes care of that. And so in case the NHD was missed and they missed the flood zone on there, your lender is going to run a flood cert for you. And they're going to require that you get flood insurance. When you are paying all cash, we've got to remember to remind our clients to get insurance on their property and to get flood insurance if they are in a flood zone. Our report is so easy to read. On the myNHD report, you just go to the summary page and you see what you're in or out of. And just go to the pages, it'll tell you exactly what the zone is, what the issue is. If it's yes, you go to the right-hand side of that report, and it'll tell you what page to look on. If you're looking at it digitally on your handheld device or on your computer, iPad, all you do is press the hot link and it'll take you right to that page to read more about it and get your questions answered. If you have more questions, just call us at myNHD and we're happy to answer them. But it's really important with those cash buyers. You don't want that coming back on you, that your buyers move in 2 months later, there's a horrible flood, and all you have is the NHD report to rely on. And in the beginning, like you said, well, we didn't read it. My agent didn't counsel me that I needed to have flood insurance. We didn't have a mortgage. Shouldn't there have been more work done on this? And they might have a good claim on that.
One last piece on the cash buyer. 2 weeks ago, I was a guest speaker at Escrow Association discussing insurance, and I flipped the interview around onto all the escrow professionals, and I said, "What is it with cash deals?" Because me as an insurance broker, I get a few clients a month that reach out to me out of the blue and saying, "Oh my goodness, I purchased this home last week, last month, last year, and I just realized there's no insurance. Escrow didn't say anything. Nobody told me anything. What's going on here?" That happens every month.
Right.
And so I asked the escrow folks, "What's the deal?" And they all were unanimous in their answer. They said, when it's a cash deal, we give them a disclosure. And the disclosure says you're on your own for insurance, basically. We're not going to help procure it. We're not going to pay it. It's not a part of the escrow. Any insurance is outside. Even though they all say that disclosure is there, I have people that call me every month that are uninsured in a new home. And if you're a cash buyer, that's an even bigger risk. The place burns down, you can't hand the keys back to a bank. So that's a big deal. I do want to mention, there's one question here I wanted to answer real quick in the Q&A. Remember, if you guys have questions, the Q&A button at the bottom. Blake, you're asking, what is the California Fair Plan? California Fair Plan is an insurance risk pool. It was created by an act of legislation by the California government. It is not funded by taxpayers. It is not funded. It is completely self-funded. It is self-funded through the premiums that it collects and through all the participating insurers that sell insurance in California. But it's considered the insurance company of last resort. When every insurance company declines to offer coverage for a particular property, the Fair Plan is available. They give a very basic, stripped down, fire only policy. If you're getting a loan, typically fire coverage is the one component in a homeowner's policy that's a requirement from the mortgage. They don't care about the other things unless you're in a flood zone, but it sells a super stripped down fire only policy. And we have used them for forever. But more recently, with all these carriers leaving the state and the ones that are still riding becoming so much more restrictive to do business with, the usage of the FAIR Plan has gone through the roof. A lot of people are having to move to the California FAIR Plan to provide their coverage. And just one little piece on that, when we do sell FAIR Plan coverage, because it's so stripped down, we also combine it with a companion policy known as a difference in conditions homeowners policy, or a wraparound policy. And the thought is those two policies together will provide the homeowner with coverages that are comparably found in a homeowner's policy. And Blake, is it extremely expensive? Well, that's relative. I will tell you, no. It is not. If we're talking about homes that are in the fire areas, when I'm working with clients, because I'm a broker, I can go to a lot of sources. And so when somebody is in a higher risk wildfire area and they look like a FAIR Plan candidate, I always try to provide at least two different options. One of them being the FAIR Plan, and then one through, usually it's like a non-admitted type of carrier, like a Lloyd's of London or Scottsdale Insurance. These are outside carriers that will take riskier stuff. And I will tell you that 9 times out of 10, when you're comparing options between a non-admitted insurance carrier like Lloyd's of London or the California FAIR Plan combined with the wraparound difference in condition, FAIR Plan's always going to be less expensive. They only offer up to $3 million in coverage total. The prices for $3 million in coverage, I've seen it as cheap as $5,000-6,000 for $3 million in coverage per year, and I've seen it. I don't think I've seen it above 20,000 in premium per year. Those numbers might sound crazy, but given any other alternate options available, it is significantly less expensive than anything else that is available on the market.
It's an option, like you said.
Good question.
Resort. A good option is working with a broker like you, who researches or goes out to many different companies that are still writing policies, because like you said, all states out of California, Farmers, State Farm, the big companies are kind of out of California. You can't turn to them anymore. So unfortunately, your local State Farm agent isn't going to be as much of a help as they were a few years ago. So working with a broker is one of those things that agents can do as well, because you're doing the hard work of calling 10, 15 different companies for them instead of them having to do it.
Exactly. So let's talk about, to summarize, some important takeaways to everyone on this call. I'm assuming most people are real estate professionals or involved in the real estate space. So I'm speaking to you. As Dee Dee said, you got to start early. Get that NHD report. Start shopping for quotes. I will plug our business, myIQuotes, because we've created a really basic and cool portal for real estate professionals. Consumers can go and ask for a quote there too, but it's really designed for the real estate professional. And I would encourage you, give it a test spin, create an account. You can order a quote as a guest, but if you create an account, it'll create a repository of all your quote requests, and then we can send the quotes back to you, and they will stay there so you can access them at any time that you want for your different buyers and different properties. But moving forward, start early. Get your buyers to start early. If you're a listing agent, there's a couple important things I would recommend that you have a discussion about, or add to your checklist of things that you discuss with the sellers. Number one, ask your sellers if they filed any claims on their home in the last 7 years. Companies are looking back 7 years now. Very important. Also, insurance companies are getting really particular about updates. They want to know that the home systems are updated. Ask your sellers this question: when have the following systems been updated or replaced? The roof, the heating, the plumbing, and the electrical systems. Those are all really important. Have you filed any claims? Have you updated your systems, and when? And be ready to share them with buyers, potential buyers, because those buyers will likely need that information in order to get insurance to buy the house.
Yeah.
So those are some tips for listing agents. If you're a buyer's agent, go to the website, myIQuotes.com. Request a quote. send your clients to request a quote. Seth and I are primarily the two people right now that are responding to all those quote requests. You can get direct access to us. And we do a couple of things different than other agents do. We try to pre-qualify or pre-underwrite the quotes as best as we can so that we're giving you something that's accurate and will work when it's time for closing. We run the clue reports to check on the claims history. Is that going to be a problem? We check for brush eligibility in advance. And we're brokers, so we shop around. I'm not loyal to any one insurance company. I think right these days they all kind of stink, but that's just my personal opinion. But I really work hard to align my clients with the carriers that I see are doing best at this time. And so, those are all important things that you all real estate professionals can do to help make insurance not become something that could cause your deal to go sideways.
Right. Anonymous, I see your question in there. We're going to get to Q&As at the end because we're just getting ready to wrap up here in a few minutes. We'll get to any other questions in just a few minutes. Let's talk about some opportunities for agents in this market. In every market, there's always opportunities, even when it seems like there aren't any. So one of the things that I would suggest is to reach out to your past clients and be a resource, be that point of connection. And what a great thing to do to call your clients on their, close to their almost year anniversary, and say, how are things going? I just wanted to touch base with you. How's your insurance coverage? There's been a lot of changes in insurance. I have a resource for you, and you're the hero of the day, right? You want to be the hero. You're going to want to be the agent that has no problems in their transactions, because that means more referrals for you. So getting out ahead of that early is something really important to do. There might be more people that are wanting to sell their homes because of, oh gosh, I'm tired of the threat of wildfires. I'm tired of my insurance premiums increasing. My kids are in North Carolina. I'm going to move back there. And
Dee Dee, you just mentioned a renewal that we were talking about the other day. So if a friend of yours had some crazy renewal that, that could cause him to want to sell right there. What was that one about?
So there was an area in Rancho Cucamonga that I'm not going to go into the details of it, but an area in Rancho Cucamonga where they are in a high fire area, and someone, not just one person, but apparently the whole neighborhood, was getting renewal notices with $26,000 increases, which just absolutely blew my mind. I think my jaw hit the floor when I heard about that. But those are people that, and we talked about it, it's kind of the game that the insurance companies play, like, oh, I'm just going to give you a huge increase that you can't do, and then you're going to leave and you'll go somewhere else. So that's, certainly a possibility. It could be that they have to go to the California Fair Plan because they can't get coverage in their area because of the fire danger. Again, which is why you've got to order your myNHD report early before you really start to transact. Get it as soon as you take a listing, so that you can look there and see if you are if that property is in any high fire zones.
That's a great point, Dee Dee. That's a really good point to go back on the anniversary, or maybe 30 days before the anniversary, because if we're timing insurance renewals, they're usually done 30 to 60 days before the anniversary date. But yeah, I have had insurance clients that have made the decision to sell their home solely based on the insurability or the insurance costs. I had a client up in Beverly Hills. He sold his house up in Laurel Canyon, or not Laurel, I forget which canyon, whatever canyon it was, and bought in the flats. I have a client in Malibu. I've been insuring their home. It's a big home, but I've been insuring it for years, for about $25,000 a year. Post Woolsey fire, it's in excess of $150,000 for 1 year of homeowners coverage. And so that house is for sale right now. That's happening. So there could be opportunities, if unfortunately, if my business is ruining the dream of home ownership for some of these people's in the hills, maybe you guys can be there to help them list it and move somewhere that's less expensive.
Absolutely. I think that's such a great thing to do. And, so often we just want to be the heroes for everybody. And it's a great opportunity for you to ask in those conversations, hey, do you know of anyone else that's considering buying or selling? I'd love to help them navigate these challenging times just as I'm helping you. So it really is a way for realtors to strengthen their current relationships and then also get more business too. And so I'm glad everyone is here watching this. Let me see what else was on my list for us to talk about today. We talked about AB 38 a little bit. Touch on the landslide issue, Jimmy, because we have heard of these landslides, a lot of them occurring in Orange County. And the most recent one was those beautiful townhomes that are kind of sliding into the canyon. It just kind of makes my stomach turn. Is landslide something that a normal insurance policy will cover?
Unfortunately, no,
Yeah.
it's not. Can be subjective and it depends on the situation. But the best way to have any chance of coverage would be to carry not only homeowners coverage, but earthquake and flood, even if you're not in a flood zone, because depending on the circumstance, and I'll just say what's happening in Palos Verdes, it's not something that's covered. There are some news reports saying there is coverage available, but it's very costly. I can tell you that nobody has that coverage. That's like businesses that had coverage for COVID. No one did. And so standard policies would not cover that. However, I've had situations where there's been mud flow events. Mud flow ended up being covered in under a flood policy. And if there is a landslide as a result of any seismic activity, then an earthquake policy would pick that up. So there's not a catch-all policy to quote unquote cover landslides, but landslides can happen in various ways and at different causes. So having all three of those coverages is going to be your best chance at recovery, but there's no guarantee.
And if I think those properties are probably around 1.5 million, maybe they might be more, I'm not quite sure. But I think I saw one about 1.5.
Not anymore.
Probably more.
Yeah.
So I mean, certainly warrants at that price point, it certainly warrants getting that kind of insurance, especially if you
Absolutely.
Yeah,
Absolutely.
it's important to do. Let's talk a little bit right before we wrap up. Let's talk a little bit about what makes myIQuotes different. We've touched a little bit on that here and there, but why don't you pull it up together for everybody?
Yeah. So myIQuotes, we have been working around providing insurance for real estate transactions for well over 20 years. So we understand the lender requirements, we understand escrow and all the different needs. A few things that we do differently, or we'll put our name behind, is one, when we put a quote together, we try to pre-underwrite as much as possible. We run clue reports on the quotes. Not everybody does that.
Yeah, that's important.
Okay, and if you request, we can provide you with information or a copy of that in most circumstances. We also determine brush eligibility in every quote. We're not going to send you a quote if the carrier isn't going to be okay with the location of the property. We shop around. Being a broker, we shop with all the leading carriers, or at least the ones that are currently open. And we know lender requirements. So the coverages we provide and the deductibles we provide guaranteed are going to meet or exceed the lender requirements, eliminating any back and forth at the last minute to adjust the coverages to meet the lender's guidelines.
Awesome.
Also, again, we have that website. I mean, everyone has websites, but it's a quote request tool designed specifically for real estate professionals, where you can quickly, easily order a quote, create an account, and then it creates a repository of all the quotes. So you don't have to go searching for the email or find where the quotes are. You can just log into your myIQuotes account. It's free, and it will give you all the information and quotes that you requested and we've prepared for you. It's pretty cool. It's basic. It's not fancy yet, but it gets the job done. And those of you that do try it, I appreciate any feedback that you may have.
Yeah, doesn't have to be fancy, you just have to get the job done. That's all.
That's right. Click, quote, done. That's our motto that we're using.
All right, we have one question from Anonymous. Can you comment on larger HOAs being dropped by insurance and how we can advise our clients to research the possibility of this?
Yeah, I wish Seth was on the call here at this point. He is an expert in this area. So I'm going to just repeat some of the information that he is shared. But Seth, his information is at myIQuotes.com. He is the HOA expert. But a lot of HOAs are being dropped, and our office is headquartered in the San Diego area. It's happening to a lot of HOAs in North County, San Diego right now. It's a big problem. There are some markets that are considering picking them up. It can be costly. Also, one other additional source of remedy is the FAIR Plan has a commercial fire policy that is available for HOAs, and they're currently in process of increasing the limit. I don't remember the number, 20 million, 30 million, I forget, but they're doing a significant coverage increase to help accommodate some of these HOAs that can't find a home elsewhere. So it's not available yet, but again, Seth, who's my counterpart, he has all the information about that. And I think 20 million on FAIR Plan.
What happened? We lost him, and then he lost his ability to talk. So I just gave him Seth, you can talk again.
Oh, that's nice. Thank you. Yeah, as Jimmy was mentioning, the FAIR Plan is going up to a $20 million limit on commercial HOA policies. That's going to be in Q4 of 2023. So that is coming. So there are things that will be available, but that particular coverage, when we say 20 million, is per location, not building. So if you have a homeowners association that's 100 buildings, you're still really limited in the amount of coverage you're able to purchase from the FAIR Plan. So there are some excess and surplus lines carriers that are out there that are taking on a lot of these risks. However, when we talk about the cost of insurance, they are much, much higher than what a lot of these HOAs are anticipating for their insurance costs. But if we go back and look, think about Surfside. That was an incident in Miami where they had the condominium towers collapse, and they did not have sufficient insurance coverage for those buildings. So even though the cost may be higher, it's really, really critical to really do your due diligence. If you're on your HOA's board, make sure you're involved in those conversations with the insurance agent that's working with the homeowners association, and see if they are exploring all of the options that are available. They may not have access to specific programs, so it may be in the HOA's best interest to go out and maybe get other competitive bids, so that way they can try to compare the costs and try to determine whether self-insuring is valuable, or maybe going out and looking at some other insurance programs. The cost may be a lot higher, but again, you don't want to be in a situation where you have insufficient coverage and then your homeowners association cannot rebuild, and then all of your unit owners are in a situation where they don't have the capacity to take ownership back of their unit. So definitely there is some relief coming, but still it's really not enough, and we do need to maybe trying to explore some other options in the marketplace. That's why it's a great it's great to work with a broker, somebody that's independent, that has a lot of different options, and somebody that can really try to solve those problems for your clients.
It's a great thing if you're in an HOA, have Seth come in and talk, invite Seth to come in and talk about what's going on and what the options are, what the solutions are. Like I said, there's opportunities in every market. With every challenge, there are opportunities. We just have to focus on those, and we will get through this. Hopefully this does not last forever, just like the desert heat. It won't last forever. I can't wait for September. I actually can't wait for like the cold winter. I might just go live up on the mountain, take the Palm Springs tram up to the mountain, just pitch a tent and live up there for the next couple of months until it gets a little bit cooler. Do we have any other questions before we wrap it up? Feel free, and we'll take those now. We really appreciate everybody joining in. And as I said in the beginning, we really hope this has been beneficial to you. Thank you to Seth and Jimmy for being here with myIQuotes, and really some good information, and really some tips and tricks that agents can take out into the field today and start improving their business, utilizing the information they've heard today to improve the success rate of their transactions and get to that closing table all the time in regards to insurance. And if you're interested in other webinars that we're doing, again, this is the myNHD featuring series. This rest of this month, we have CAL FIRE coming in and talking about AB 38 and the moderate maps for SB 63. They're going to be coming up potentially at the end of the year. And then we also have our commercial division talking about the requirements for NHD in commercial transactions. And then also we have Rocket Mortgage coming in and talking about interest rates, what's fueling them, the economics behind it. And a reminder that the Fed funds being raised does not affect our mortgage insurance. It is inflation that impacts our mortgage insurance. So she'll be talking about all the different factors around interest rates. Sorry, did I say insurance? I meant interest rates for mortgage rates. And she'll be talking about some programs that you might have known about from Rocket Mortgage as well. And again, we at myNHD love working with our clients. We try and bring you more information than just about your NHD, things related to NHD, like insurance, and certainly in the real estate field to help you close your transactions more successfully. If you're not working with a vendor that's doing that, please consider myNHD. We'd love to be your NHD provider of choice. With that, we don't have any other questions. Oh, we have one question.
We can give our phone number real quick. Seth, will you give your phone number if anyone wants to discuss HOAs and anything else with you?
Yeah, sure. Any agents that need to reach out for specific questions on properties, listings, or working with buyers, or even HOA questions specifically on the commercial side, you can reach me on my cell anytime, 858-522-0476. You can also email me at seth@myIQuotes.com. That's the best way to reach me.
My cell phone number, 818-805-6706. My email, Jimmy, Jimmi, just like it's spelled on the, right there, at myIQuotes.com.
Great. And if anyone has questions for myNHD, I'm DD, just 2 letters, DD at myNHD.com. And with that, that's a wrap. Thanks everybody for joining. Go out and have a great rest of the day, great rest of the week. Jimmy and Seth, thanks so much for joining.
Thank you.
Thank you, Dee Dee.
Fantastic information.
Bye.
Bye-bye.
Bye, guys.